This is the Equity Management Academy mean reversion trading. Global food crisis looming. Summary. The mainstream media is increasingly focused on a looming global food crisis related to the war in Ukraine. Interest rates are another issue in relation to what the Fed is going to do based on the inflation rate. The key is that interest rate market will make a move, not the Fed. A food crisis could pressure on the Fed to print even more money. Fundamentals. The mainstream media is increasingly focused on a looming global food crisis related to the war in Ukraine. A plan is being discussed in the Biden administration about allowing Belarus to move Ukrainian grain out of the Ukraine by lifting the sanctions on a limited way on Belarus. One issue is removing mines in the area before the grain can be transported. It will take at least 6 months for any grain to get out of Ukraine, which means demand will continue to outstrip supply in the global grain markets. Prices will continue to remain high and may even go higher. The new planting season for winter grains in Ukraine could also be affected in September if the war continues, which it shows every sign of doing. On top of the war, drought and weather issues are affecting harvests in North America, Brazil, and elsewhere. A stronger U.S. dollar in the past few months since the Russian invasion of Ukraine is not good for U.S. grain exports. A weaker dollar would increase U.S. export demand. Interest rates. Interest rates are another issue in relation to what the Fed is going to do based on the inflation rate. Food and energy are major components of the Consumer Price Index, which is a gauge of inflation. Ukraine and Russia produce about 30% of the world's grain, as well as crude oil and natural gas, which is pumping up inflation as those supplies are interrupted. Rising interest rates do not just affect Main Street. It affects the government in terms of the budget and trade deficits. Interest rates have increased more than 1,000% since 2020. The low of the 10-year note in 2020 was at 0.33%. We peaked at about 3.13% about a month ago, and we have traded down below 275. Such rates are bullish for the stock market. Therefore, the level of stocks is surprising. Anything above 3% is bearish for stocks. Anything below 2.75 makes the stock market undervalued. Interest rates have been in a trading range. If they break above 325, then we will see a massive correction in stocks. If we revert down below 275, then we will see a massive rally. The trading range is defining where the stock market is going to go. The key is that interest rates markets will make a move, not the Fed. The Fed is determining interest rates on the 10-year note and other interest rate-based products. The market is leading the way, and the market always leads the way. A food crisis could pressure on the Fed to print even more money, which would not be good for the U.S. dollar and very bullish for commodities. Gold Technical Standard Deviation Analysis. The monthly Standard Deviation Gold Report from Nikkei the Robot, based on the Variable Changing Price Momentum Indicator, VCPMI, the monthly trend momentum of 1842 is bullish. The monthly VCPMI of 1849 is a bullish price momentum. A close below 1849 would negate this bullishness to neutral. If you are short, take profits at the buy 1 and 2 levels of 1782 to 1724. If long, take profits at the sell 1 and 2 levels of 1908 and 1975. The weekly mean is 1854. The monthly mean is 1849. The market is trading above the monthly, weekly, and daily means. By trading above 1849, the sell 1 target is 1908. A close below 1849 would negate the bullish pattern, and a second close below 1849 would activate the targets of 1782 to 1724. You want to listen to the fundamentals, but you want to trade the standard deviation levels. The VCPMI levels are based on the math of the market factors in the fundamentals, and shows you where the market is likely to move. Our traders are up more than 100% using the VCPMI since February. Disclosure. We have a beneficial long position in shares of GDX either through stock ownership, options, or other derivatives. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.